I'm now very pleased to welcome Dean Mirfin to say a few words on behalf of the industry partners who've sponsored the event today, and they are Just Retirement, LV, Partnership, Key Retirement, and is it EY nowadays? I used to call it Ernst & Young, but I mean, I'm not one of these branding people, but let's assume it's EY because that's what it said on the building outside. And I think it's only through the generosity and the public interest shown by companies of this type that we actually get the opportunity to debate the key issues and to actually find out what consumers feel about a lot of these issues which are being driven out of Whitehall and being driven out of the boardrooms of pensions providers and so on. So Dean, it's a great pleasure to welcome you today. Thank you. Look forward to hear what you've got to say.
Thank you very much. Thank you, Lawrence. Forgive me for not standing, as Lawrence said in his introduction. Unfortunately, I've got 3 breaks in my leg at the moment, which is slightly inconvenient, but still felt it was very important for me to be here today. What I really wanted to share with you initially was some of our thinking behind why we really started to look at the consumer before anything else, and to hopefully give you a bit of insight into why we believe this research really was at the heart of where all the lead up to April was going. And really our view very quickly after the budget was that anything that was to follow the new freedoms and the announcement of those freedoms had to be about consumer outcomes, not about products. A lot of conversation, a lot of discussions that have taken place ever since last March have been around what products are going to deliver what we think people want. Where we wanted to approach it as a distributor, as an advisor in retirement, was what is the consumer trying to achieve, and what are the potential ways we can get the right outcomes for those consumers. And if there were product gaps, that we would then lead on to that, but not to try and create the sort of horse before the cart, so to speak, or the cart before the horse, etc. So in order to do that, what we wanted to look at first was the need to understand really what the consumer is trying to achieve. And I think what the report really touches on, and we'll come on to in a moment as Ben's already covered, is actually when we allow consumers to voice what they are trying to do, they are quite rational. And we'll look a bit more at that in the context of the report. And focusing on outcomes, not products, as I've already mentioned. So that was really our start point back in April. What we did then was we contacted our very good friends at EY, and also we spoke to Ros at quite some length as well, and shared our thinking around what we were trying to find out about the consumer, not just in light of the freedoms, but even almost stepping back from the freedoms and just ask consumers in retirement, what are they trying to do from an income, from a capital, just from a lifestyle point of view as well, and really get to understand them maybe in a way that we've never really tried to do before. On the back of those initial conversations, we spoke to a number of like-minded organisations who Lawrence had already mentioned, and really today is the culmination of a lot of time and effort, and I suppose not just in terms of on behalf of the sponsors to thank ILC and everybody involved, but I think it's fair to say that the sponsors as well haven't just sort of dug into their bank accounts, but have also actually played quite an integral part on the back of the research in terms of really articulating what that means and what that could mean going forward. So on behalf of everybody, I'd say thank you to everybody involved. But in terms of what really I think this research tells us, certainly from our point of view as advisors and as distributors in this space, is, as we've already mentioned, is when facilitated, people have a good idea of what they're really trying to achieve. When you get the chance to delve into the research, you'll see that they can articulate that quite well. Whether that's income, whether that's the need for some capital, whatever that may be, they are able to articulate it. But then what you see is a huge divide over this first point, which is they don't know how they're going to do it. There is a real gap between the what and the how. And that was the real gap, I suppose, that we first identified in this process. And our view is that this was just about them finding out that bit more about how might I do that. And to do that in a way which is not about product, but again is still focusing on outcome. And therefore that we believe that they need to understand more about what their options are, but to take that, in our view, not only in terms of the government guidance, but beyond that, to make it even more personalised. And we believe that to get to that stage, a consumer shouldn't be parting with any money to do that. They should be in a position where before they even engage with an advisor or with anybody for that matter, they understand more about their options and how they're going to achieve their goals. And ultimately we believe that that will assist consumers in starting to see the value of advice. One of the huge misconceptions, and you'll see how this falls into place later, is, as we speak to more and more consumers, is that the end consumer believes that it's a one-choice outcome. Do I buy an annuity? Do I go into drawdown? Do I do maybe a fixed-term annuity? What do I do? Do I take it as cash? It's quite an eye-opener as we're engaging with consumers at the moment where we say, you do know you could do all of those. And customers will say, so I can have some income guaranteed and I can also have more than my 25% cash. Or I can put some into drawdown, some into an annuity. I can do any combination of that. And that really takes us back to this, what are my options? And the biggest option is it's not one product. It's actually a range of outcomes, and it is really engaging with them in a way which facilitates them really being honest about what they want and then matching that in terms of the advice that's given in meeting those outcomes. So in terms of what is a good outcome is firstly a logical approach to achieving that, and that's really finding a methodology of engaging with a consumer to help them identify what they are really trying to achieve, but where product isn't mentioned at all. So a guaranteed income may well be an annuity, but it could be a guaranteed income for a period of time, and therefore it might be something that's for a fixed term. But it really doesn't matter, because if a consumer can articulate what they're looking for and we help them with that, we can then start to look at and develop products that deliver those solutions. So really, out of the research, we got to what we sort of see as being our three golden rules of retirement in terms of approaching what consumers really are telling us they're looking to achieve. And the first is that there is a need. Now where that comes from will differ from consumer to consumer, but there is a need for some form of guaranteed income. That was the first thing. That we're able, that there's some flexibility to allow for a change in circumstances and for some of those unforeseen events. And therefore, as a result, putting all of your pension pot into buying an annuity, for example, if you've no other capital, won't necessarily help facilitate that. But by having a blend of solution, even for somebody with a relatively small pot, can still facilitate some of these outcomes. And that's part of that collaboration between an advisor and the end consumer. And that a consumer should understand all the risks and consequences of that decision now, or those decisions now, not in the years to come. So they understand that whilst they maybe want all of these choices, they have to take a consequence of any of those decisions and understand what they are in order to effectively shape what the real final outcome looks like. So in terms of how we approach this, some people may have seen this in other guises as well. Very simple model in terms of how we engage and have a conversation with consumers about what are you trying to achieve, and this isn't necessarily about there's a product for each element of this. It's actually more about it may already be catered for. So what is the essential income at the bottom of this pyramid that you're trying to achieve to hold up and support your retirement? And is it important to you that that's in the form of a guaranteed income? And if it is, what do you already have? Is there a shortfall, and therefore we'll work with you on what's the best way of potentially providing the balance that you need. And then in addition to that, what about lifestyle? And then on top of that, looking at what about those unexpected events? What about where there's maybe unexpected capital needs? And ultimately, potentially gifting either while living or on death. And really this model in a way is really trying to shape, and I know we've, in the form of Maggie with us today from the FCA just before Christmas, talked in terms of government guidance and about advice being about providing tools and processes to help achieve good outcomes, not to sell products. And we believe that what this research really does is help us as advisors to show that by engaging and facilitating the right process with consumers, that good outcomes become all, for want of a better way of putting it, common sense. And in a way, protect consumers, not, as some people may word it, against themselves, because it isn't about that. It's actually more that we help them understand what outcome they're trying to achieve and how best to achieve that. How do we think they'll get there? From the point of view of Key as an organisation, we don't believe this can be facilitated without regulated advice. But what we do believe is that a consumer can be taken on quite a journey of investigation around what are they trying to achieve and what are their options maybe to achieve that without the need for advice and the need to pay a fee for that. And that really is a bit of a tease in terms of what we're trying to achieve, and actually we have actually soft launched this week and we're trialling at the moment, is engaging with customers through a process of how maybe can I achieve what I want, and then once they've done that, saying would you like us to advise you on how best to do that now, but that they get that engagement, an understanding of what they may be trying to do completely free. Thank you very much for your time today. Hopefully that gives you a bit of an advisor perspective on where we think this research starts to highlight.
Thank you, Dean.